The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on this 13th day of January, Friday the 13th, and we're looking at the Dow's up 6 at 19,897. The S&P is up a little more this time. It's up 5 at 2275. The comp index is at 5,500, and I lost it. 73. It's up 28 points. The volatility index is down at 11.22. That gives you it should be buying pressure, but it's really giving you support at this particular time. I suspect it's going to move higher a little later in the day. The E-mini is up 650 at 2270. Let me show you something. The Chapman wave, falling axe formation. That's just a declining cone, slightly lower highs, sharper lower lows. And it gets into an area where if it breaks out and holds, it's very important because it'll take you to the next left side higher peak. Well, it did go to 2273.50 today. I said to subscribers 2273s to 2277s. Those are the numbers you got to watch. Well, it reversed there, and the level we're looking at is 2277, the round number all-time high that was made on January the 6th. That means that the weekly chart, if there's no new high this week, has made a peak, a very subtle peak from the week of the 16th of December at 2273, pulls back for 2 weeks, slightly lower highs, goes to a slightly higher high of 2277, round number, the week of the 6th of January, and now making a slightly lower high. This is so interesting. Why? A number of things. Because within the context of the 120-minute chart, I'm going to show you a bunch of things. We discussed it yesterday. It was a fascinating day. And I almost forgot about it. I can't believe it. Yesterday, I went to the New England Auto Show. Every year for I don't know how many dozens of years, dozens, it's actually quite a few decades. I go to the annual auto show. They did skip 2 years during the bad times of 2009 and 10 or somewhere around there, or they came in late. Well, what was interesting is the number of cars. Last year I said that if you were prepared to spend a certain amount of money, something like, let's say, 22 to 25,000, there were oodles of cars that you could just go, close your eyes, point, and pick out, and you'd have a car that was, if you had to compare it to something from 10 years ago, the quality and everything was just superior. This year, it depends on the accoutrement. Remember, I keep talking about this all the time. They give you a base price. All those base prices, come on, you couldn't find a car at the base price. Everybody has something added to it. So they, a la carte, remember what the airlines did? I said, this is what the automobile companies are going to do. Probably that's what's going to happen in the healthcare. It's the thing, the jour, is to create a la carte, because the more you can separate prices from an overall package, the greater the chances of increasing your profitability. Well, so I'll talk about that in a moment. We'll get to the automobiles. All I can say is that now I can say between 28 and 31,000. And most people these days also, from what I read, are leasing cars. But let's just put that in the category. There are literally, you could go from any side of this. I don't know how many cars, 400, I don't know how many cars there were, automobiles, I should say, because there were vans as well. It was incredible. The quality, American cars, I'll talk about it in a moment. Let's get to the market. So the market says that it's really struggling. You remember, we had discussed this weeks ago. I said it's not the 20,000 in the Dow that's important. Let me go there right now. It's not 20,000 that's important. It's this pattern here, all these different charts. I'm sorry, you're going to get charted out. Let me go to the big one here. It's this resistance area that I drawn in ages ago that said within this resistance area, that's going to be the struggle. Because once we start going into the 20,000s, we're broken out. That's it, psychologically and in every other way. What you will see is even if there's a move into the 20,000s, you come back into the 19,000s, but at some point we'll be trading in the 20,000s for quite some time, and it's for a long period of time. So what's happened? Look at this 9-period exponential moving average, the blue line, like a magnet. The Dow can't get above it without testing it, can't get below it with coming back to test it. Did that yesterday. Back today, it spikes up, comes right back to the 9-period moving average, the blue line. Look at the red line, the 20-period exponential moving average. I would consider this a regression to the mean. No, I can't really do that. That's a mathematical term. I'm not even going to get into the mathematics. What I can say is, historically, the breakout from November the 7th above both the 9-period moving average and the 20-period moving average, there is no question that at some point the 20-period moving average, this pinkish line here, 19,817, is going to become resistance until there's a snap to the upside and it becomes support once again. Get that out the way. Let me show you something we spoke about yesterday. Remember I said in the Chapman Wave 5, there was a chance that we were on our way down. At this point, you remember during my show, we were still above the 9-period exponential moving average. And what I'd said is the real issue is, do we break 19,770 in this move down or not? And what happened is we came down to 19,770 intraday and then started a reversal to the upside. That was during my show. We stopped. We started a thing. And I remember I placed in here, I said, this is now Chapman Wave 5. This is where we can start to expect some kind of a bounce, not knowing that there'd be a really big bounce. I just said that was the support we were looking at. We were looking at the 10-minute chart. But wait a minute. That was also a peak D in the Chapman Wave, 120-minute chart back in 19,999. And that became a leg D to the downside. And now it's a trough D. So my assessment is that we're in we're continuing the sideways choppy phase. Most importantly, there are near-term parameters we can look at, and a close below 19,850 today, or we've got a holiday Monday, Tuesday, would suggest we're going to make an arch formation and come back again. On the upside, having hit this Chapman Wave inside track resistance area, look at that, to the outsides of the candles. 1, 2, 3, 4 times we've hit that and been repelled. So that makes this area between Dow 19,933, I'd say today, now it's 19,334, to the high, I said 19,953, I believe was my number. When it went to 19,952, that's going to be the resistance. That's the area, the repellent area. So let's just talk about that, and then I want to show you something that's even more important. Within the context of patterns, I mentioned this yesterday. I said I'm drawing this in, but it is so long. It is extended sideways so long for the Dow that it is a stalk leg formation, but it'll break down if there is a close in the next few days under 19,718. We managed to go to 19,770. This pattern still continues. I'll talk a little bit more about it, and we'll go into the numbers and the questions that I've been asked straight after this. Basil Chapman, Tiger Technicians Hour, and give us detail. Yep, we'll look at the comp of the NPX when I get back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
So, folks, this is Technical Friday in the Chapman Wave. I've had technical questions here in the den. I've had a couple of questions here in the emails. Let me do this, if you don't mind. I want to be as thorough as possible because we've got a long weekend coming up. No market on Monday. There's a lot of work that needs to be done. I'm looking at the NDX 100. And I'm also going to keep looking at the left side. Just keep looking at the three charts. One is on the left, the daily. The middle one is the weekly. On the right is the monthly. Most importantly, keep looking at it. And now you're going to see the same chart, except it's going to be called the QQQ series right there. And that's all notated. And what I've got here is a peak F with a question mark right there at 121.11. You see, the big issue here, and I've noticed this with charts over the years, it doesn't happen often, but once in a while, there is absolutely a peak ABC from a low bar of importance. In this case, 113.45 in the QQQ series. That was the turnaround day of the 4th of November of last year. And a gap up, and then it got filled up the gap and kept going. Everything about the stochastic and MACD suggested that peak C really had the characteristic of a D, and it pulled back sharp enough, number one. Number two is that within the context of the following move up within 117, within one leg, it went, the high was peak C at 119.51 in the Chapman wave, 119.51. And then it went to 119.54. And that really fulfilled the peak D. However, if you're looking at the patterns that we've got, so much about it suggests that it's more likely that that D is really a brand new A, then a B, then a C, and then a D. And that there's a real good chance with the MACD so strong and the stochastic at 96% that the NASDAQ is really saying this is a brand new leg B and that we should go into next week before we have a much deeper pullback. That's kind of what it's saying. If I'm very strict about the notation, I can continue to say that that was a G. So there's no problem. I've got everything in line, A, B, C, D, E, F, and it goes to a G. That was the spike up on the 27th of December at 121.52, pulls back. The MACD dips slightly, goes back positive. Stochastic pulls back very sharply, enough for me to say that there's a chance that I should be putting a down arrow there for G and an up arrow here for a leg A, and then this is not E/B where we are right now, but it's a B. Let me show you something else. If you look at Facebook, Facebook is in a brand new spiral to the upside, broken right through the gap way back from just going into the November low, from October into early November. So is that early November? No, it was still October. Yep, no, it was. So the gap down from the 2nd of November into the 3rd of November, right? We make a low of 113.55 in Facebook on the 14th of November. The other day I said, I like Facebook. Gee, but look at the way it's moved. It moves so quickly. And if you look at Google, I'm going to go, if you don't mind, Alphabet, I'm going to Google chart. This is A, B, C, D, pulls back, and is this brand new A to B? I could call it that because the MACD is flat. So what I'm saying is that I have enough evidence in the stocks that were very weak in the NASDAQ that have now come on very strong to say that Amazon is in possibly a leg D. I like what I'm seeing. I do not want to fight the tape. And I'm going, so the question is, where are we? So in the Chapman Wave methodology, I like to be as strict as possible. So being strict as possible, I'm going to call this a G with a pullback, and this is possibly a new leg B to the upside. I love the way the stochastic is holding. I love the way that the MACD is acting. I do not want to fight it. I love the way that it's gone to all-time highs. I like, not all-time highs, but it's it is a harbinger of positive action to come. Now, where the Dow was the leader, I think the Dow is taking a well-earned breather. It's taking a breather probably because of Bank of America, BAC. Yeah, it's not doing very much. It's up 27 cents, trying to in a cup formation, trying to retest the left side high. It should be way higher, but all of everything, the earnings, etc., 23.39 was the high on the 15th. I think that's all out. It's just going to be a digestive phase. JP Morgan, maybe it's the same thing in JP Morgan. Yep, same thing, candle, doji candle, spikes up to a leg, E, pulls back. So the rotational correction that I've been talking about, a high-level correction, is unfolding. Let me do this again because I want to go to the comp index. And I got a question coming up here. Tim couldn't stay on the phone. Not on the phone, wants to look at IBB as a short. I'll be back there in a moment. Let's just do this because IBB is actually part of this whole package that I'm looking at right now, Technical Friday. I believe that the comp index is now in a leg B. Yep, F/B, but I'm going to call it a B. Could be totally wrong here, and you'll know I'm wrong by making it real simple. At 5,005, nobody really looks at the comp index. Let me go to the Qs to give you the numbers because most people do look at the Qs. If the Qs take out 121 as support by Thursday, because we need Mondays off. By Thursday of next week, this will be a peak E. At this particular point, I don't see any reason why I should call it anything else but E/B with my preference, probably saying it's really B/A. In other words, it's positive. It should be positive into next week. Got it. Okay. I hope I resolved that. And that's the way I want to discuss it. And I can go to the NQ. I have the same thing on the NQ. That's the futures. Futures. This is leg B up in the futures. I'm calling it that. If I'm wrong, you'll know that the futures are taking out, instead of being at 5,558 right now, next week on Thursday, they're below 4,900. Just make it real simple, okay? Then I'm wrong. Here's the issue, and the issue is going to go to a couple of other things. If you look at the IWM, the IW is very weak. It's still in this peak C1, C2, C3 down channel. Let me make this very clear. This is the technique I use. This is what I've been teaching. Let's just use it in practical terms. Make this green, make this red. And all it says very simply is that the IWM, the Russell 2000, needs to break above 137.50. It's at 136.61. It needs another point higher. Actually, it really needs to break C3. It needs to go to 137.97. And then I'm saying to you, hey, that weekly chart is really strong. It can go much, much higher. Okay? Now let's look at something else. You've got the I didn't want to look at I want to look at the New York Stock Exchange, NYA.X. This cup formation with a handle, not one of my favorite patterns, only because when you finally recognize it, it's already too late, has the pattern that I keep talking about. Look at that little mini lower highs, lower lows, Chapman wave falling axe formation. This says, yes, you can go above, and you'll probably go to the 11,265 area. You're at 11,236 right now. But if you do that, you're immediately in new territory. And that's going to really improve the weekly chart. That makes this Friday close so important. Why? Because being Friday, we're finishing the week. So this weekly chart on most of the indexes that we're watching is going to make a slightly higher peak this week. Well, a slightly higher peak tells us a story, and I'll be back and tell you the story.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So there was a question about the IWM and peak C1, C2, C3. Remember, that's Chapman wave technique where it just fails to make D, and then there could be a series of these failures. Well, the statement was, and it's a really good statement, there are so many times where you get your peak C1, C2, and then suddenly there's a leg D up. In fact, was it the Q? Was it the IWM? No. What did I have? I can see it now. Picture C1, C2 in the daily chart of, is it GDX? Nope. Is it I can't remember offhand. I mean, I have this memory, almost like a perfect memory for chart formations, but I can never remember which one it was. The formation, the pattern. Anyway, yes, it very often goes to C1, C2. It was the IWM, surely. No, it wasn't. Oh, it was the SMHs. There we go. SMHs. There we go. You see, I know my charts. There we go. There's your peak C1, C2. Look, peak C1, C2 at 72.70 on the SMHs. And it went there and pulled back for a day and then spiked up to a D. Then I got a sharp pullback. And then it continued higher, made a peak E at 74.34. Now, we happen to be short the small short position in the SMHs. They had a sharp down day yesterday, but look, they held beautifully that inside track support level. Now they're above the 9-period moving average. And that's another reason why I'm thinking that because of today's action, today, Friday, I think there's enough strength in the Qs just to make nominal new highs as we rotate in this correction. I almost, in fact, it was yesterday, Thursday, yeah, Wednesday night, I almost said, you know what, if there's a sharp pullback in the diamonds, I think I want to buy it, but I would not have got it because I want a test of this 90,917 low. It's 197.51 in the diamonds. I want to see that. And we never got it yesterday. And let me put it this way. I actually prefer that we don't see it, because if we do see it, we're going to be going lower. At this point, I'm looking at this and I'm saying, we've had a huge correction in United Technologies, in Triple M, my 4 Dow Horsemen, in IBM. No, huge in price, and not so much, but more in time than anything else. Look, Triple M had hit 102.77 and went down to 164. Now it's at 177. It's used time. Time should be part of your process. You can look at price, but you have to learn how to use time as well. I'm using time, and I'm saying that in the correction that we've had, there is enough strength to say that if we are going to go through 20,000 on the Dow, it's going to be when you're actually, for all of those who play the English game cricket, you know how the first batsman in the 5-day competition, or 6 days, whatever it is, could be there for a day and a half, scoring, and then after that they go down quick. But that the one catch, the one out, the one hit that misses or gets caught, or the wicket goes down, that's that one moment that you went to the bathroom, or you're looking down, you're picking up something, everybody says yes. So you've been there 5 hours, and that 1 minute that you wanted, and there were no replays in my day, so that was it. So that's what I think is going to happen with 20,000. When it happens, it's going to be when we say, oh yeah, Z, snoring, bam, 20,000, 20,100, 20,200. That's what I think is a possibility. But at this particular point, that rotational correction is still ongoing. And that means that the XLF could, in fact, now that news has come out, it could be saying, you know what, I got a kind of limited upside. I need a little more proof now. So it could go, poof, one little pop up to leg D to 2388 or higher in the weekly chart, and then all of a sudden take another big breather of time, maybe more than price. Wow, I've been wanting to say that for a couple of days, and I got that out. Okay, now let's go to something else. Because the SMHs, the semis, and the IBB are so important here, the IBB took a huge hit. All this political chatter, it's just going to be impacting the biotechs all the time. That's why I think you've got to treat it as trading positions, trading bounces, and then a sharp pullback. What I am looking at here is on the shorter term. Remember, I had a call yesterday about Realist was asking me a question about the IBB went to short. My thinking is that I'd rather let it play out. Let's see how the 120 minute, maybe there's a brand new buy signal in the 120 minute. So you got your peak A, B, C, D, E. Oh, no, A, B, C, D. You got to recycle to peak D, 2 Ds in the 120 minute chart, comes back to the 200 period moving average, and now you're in leg B to the upside. Yeah, we could come and do a little retest of the 285s, maybe a little higher. I do think that a little later on, the news will just keep coming, boom, and the biotechs will be hit. So this is a bounce, and I think this is the bounce that could, in fact, also be helping the QQQ. So that's my analysis of the Qs, the Chapman wave notation, etc., and where I'd be wrong. I'd be wrong if the IBBs now started a sharp pullback under 274, and they're at 282. I don't think they're going to do that. I think there's a slight bias to get this test of 20,000 in the Dow out the way. In the S&P, let's just do that, SPX.X. We've got SPX. Nice candle. Look at this. Weekly candle needs 2282.11 for an extension this week. If it doesn't do it this week, that means you've gone to another. I'm not calling this F. I'm sorry. I'm done with that. Maybe that's the moment you've got to be real careful. I'm calling this brand new A, brand new B in the weekly chart of the S&P. I cannot do it. The stochastic is flat at 89%. The MACD is good. It's way above the 9-period moving average. It is in the Chapman wave channel, upside, inside track resistance area, and that says there should be resistance to 2,291, and that's like 180 to 200 points in the Dow, which would finally get you nicely into the 20,000s if it can even do that. But the monthly chart is in leg C, and that's really positive. Remember, I've been talking about the first 3 months of 2017 still have a very positive bias. Now let's do this. We're looking at the IWB. Now the IWB is a different kettle of fish, in that it has not made its new high in the monthly chart, so it's still peak C. This is the iShares Russell 1000. It has gone to a peak A. Really, everything about it also here is an A. It should make a leg B to the upside. This is just a little mini consolidation. It got a little inside wedge. The Chapman wave falling X, a cone formation. It really looks quite good. And even today's action up 47 cents, up 0.38, says it wants to retest the high that was made at 127.11 on the 13th. And this is the 1,000. The IWC, now that's something I haven't looked at for a little while. Let's see where that is. IWC, yes, this has gone to a peak B already in the weekly chart at 85, 87, 82. 87.78 is the high so far this week. It won't do it today. At least I don't think it'll do it today. But this is stronger. This is in leg B in the monthly chart. This is the microcap ETF. And that's a really good sign, because they are not looking at the dollar. They're looking at other things. So there are signs here that suggest we could have this rotational correction. It's just isolating areas, but some areas are strong, other areas are a little weak, and that's what we'll see. I'll be right back. Dow's up 26.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
So there's something, Friday is the day that I want to just have my free thinking. Wherever I'm going, that's where I want to go. So there are a couple of things. Look at GM stock. So GM has made a peak D. It's had these sudden spirals to the upside. It's in G/C in the weekly. I think I have to call it a C because it's been so strong. Monthly chart is broken out from the resistance area. Now, when I was at the show yesterday, a couple of things occurred to me. I always like to go to the show, and then as I'm about to leave, I say to myself, what struck you as the most outstanding? Doesn't mean great, it means the standing out, outstanding aspect. The most outstanding aspect was the quality of everything. Now, I'm not talking about I didn't drive anything. I'm only sitting, I'm looking at it. It's in the backs and the fronts and the side, whatever it is. And I get a feel for what there is. I look up, I look down, I look at the quality, etc. Buick is superior to anything that's ever been. I mean, ever meaning ever in the last, at least since the 1980s, right? It is superior to most in its class, but I now think price-wise has bumped itself a little too high. I don't think that's going to stop people from buying it. But if you're looking at the price of, say, the Regal, which was fully with all the trimmings, you're talking about 35, let's say 35K. Well, at 35K, you can just go around the whole thing, and you got a really big choice, right? But the quality that I felt in the seating, now I'd always said for I don't know how many decades, Volvo seats are the best seats ever. They are just always absolutely superb seats. And there was a period where the German cars were like boards. You sat on a hard board and you had to enjoy it because that's the way it is. So the German cars have softened their seats, and some of the American cars that used to have these squishy, horrible seats are way, way better, way firmer. That's good. But what I was really impressed with was the standard within each car company, like Hyundai. Hyundai's kept up and even improved its standard and what it's striving for, and it's thrown in the warranty, just an oodle of things that others haven't. When I thought about it afterwards, there were 2 disappointments. The one disappointment was that Subaru, which around here on the Northeast is one of the most popular cars, I didn't think that they were extending themselves in what they gave. It's like they'd taken it for granted. Everybody loves it, and we can just keep doing the same. I did not feel an upgrade at all in the quality. Now, once again, I didn't drive the car. I'm only talking about that. Another disappointment was that in the Ford lineup, I still like very much the Fusion, but there was nothing standing out in terms of style that really said to me, wow, Ford is knocking the socks off. Whereas in the Chev area, I remember last year I said the big surprise was that the Lumina, the Chev Lumina, I can't remember what it's called now. The middle range was really good. This year it's even better. It is way up there, but unfortunately, I think they're also getting the price up. I say unfortunately because my thinking is if they could discount a little bit, maybe they do that when we're actually buying it. I think they would have a market to themselves. The Buick and Chev, they would lock it up because they do have some of the styles that people are looking for. That's my belief. Now, in terms of the trucks, I didn't do much in trucks. I know some of you love trucks. I met a guy, a real trucker. He showed me his archive on his cell phone. Geez, I'm standing there looking. We were looking at this incredible Mercedes. Anyway, so I don't do trucks, so I'm not going to be able to comment. And there were some very beautiful looking trucks, and interiors of the trucks are superb in some of them. Now, what I wanted to also say is that the reason why it was so important for me to go this year, and I go every year, but this year in particular, is I wanted to see if we'd gotten away from the pushing the electric, pushing the gas area, which I was absolutely sure would happen, and I was correct. Now they're starting to talk about speed and all that, and the Porsche lineup is really, some of them are very beautiful in the Porsche area. But I have to, and the Audi, you've got always have that red Audi A6 or something like that, and you have these young people just going in and out, sitting in it, and just pictures and all that stuff. But I must tell you that what I was really impressive was the fact that we haven't reached to the point where the front grille is giving me a major market sell signal. I know that sounds silly, but that's the way I look at it. They are getting extended. They're getting very oh man, that I grumbled about the Lexus front grille. Now some people love it, some people hate it. I'm in the hating category. I don't like this kind of H pattern, and they made it less heavy than last year. It's lighter, but let me tell you, I just don't like it. The cars are so comfy. The seats are really good. I just don't see it that style. Every time I get into the car, I'd say, oh, that grille. And it's very low. So if you park and you've got one of those little pavements, a little sidewalk, you can scrape it very easily. So here we are. We've got Ben in Tallahassee getting me off the subject of esoterics. And we've got, Ben, you want to look at the GDX?
Yeah, Basil, how you doing?
I'm doing well, thank you.
Yeah, so I got a question about the front grille of the GDX. How's that for
Yes. The front grille of the GDX looks like an H pattern as we speak. It's got exactly like, oh man, that's beautiful. If you look at
ultimately the question I've got is, what do you see as I'm putting some trend lines together here, and I'm looking at a ultimately somewhere around the possibly 25 to 26 area over the next couple weeks.
So let's just do this in a very steady way, if you have time. So I'm looking at the cup formation in the GDX, which is the Van Eck Vectors Gold Miners ETF. I should also mention we are long. And what we're looking at is the 9-period moving average is held. But look, let's take it 1, 2, 3, 4, 5. So this has a pattern. I'm going to put it right up here. This is the H pattern. But it is a different H pattern. It's not the lowercase h pattern. It is the fact that I'm looking at, I'll make it red so we can see it nice and boldly. And I'm going to make it bold. Let's make it bold. Yep, I got it bold. You see this pattern? Oh, you won't be able to see it. Now I'm going to make it even bigger. This pattern here is a very different pattern. It is resembling the rectangle formation. And I was making a joke, but in fact I was being serious because as I looked at it, and you were talking about the H pattern, the GDX, this is, I'm going to put it right over it. That is in fact an uppercase H pattern. Why? Because we've got 2335 as the high for the peak B. We've got this whole range going to 2190 as the low, which makes a rectangle formation. And the rectangle formation very much looks like the H that I just printed up there. Now it makes it very easy for me. It says, we'll be making a series of slightly lower highs and lower lows if 2175 is touched, but if it's taken out, that's not good. But if it's touched and then it bounces back, it says, okay, that's fine. It's within the chart formation. It's a mid-level consolidation, sideways, taking time more than price. I am a little concerned because it should have gone to 2336 or higher for leg C. yesterday, and it didn't do that.
That was actually my second question is, at what point in time do you really say, you know what, this peak B is really starting to fizzle out quickly?
And make a lowercase h failure pattern. Can you hold on? That's a really good question. I think a lot of people would like to know the answer. We'll be right back with Ben in Tallahassee straight after this break. We're looking at the GDX, and as I haven't done all the numbers, I should say that GC Gold is in fact down $6. We'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks, we're back, and we're back with Ben Tallahassee. But Ben, just before we go to follow up on the GDS, I just want to two things. Sandeep, you want to know about the SOXS, which is the short semis. No, I think I'm going to have to switch my position. I don't know if I switch it too long, but I think that the semis are holding. Today's move was really important. I like what I'm seeing, at least for now, in the semis. I would not be thinking of shorting. In fact, I think they're going to retest the 74.34 high the way it's looking right now. So don't do that. And the other one was a real quick thing from Stan wanted to know about CTL, which is CenturyLink trading at 25.21. And the question is, what do you think about, just real quickly to go to, there it is. Hi, Basil. Where would you enter CTL? Thank you, Stan. Stan, I would start a very small position at 25.20 right now. Obviously, you follow this. You understand what is going on. Most importantly, I would actually have a stop under yesterday's low of 24.90. That's really tight. It's like nothing. But that's the way I'm looking at it right now. 25.20 CTL up 1 penny at 25.19. And if it takes out today's high by Tuesday or Wednesday, it's going to retest the high of 25.67. So this is the starter position, and I'll speak to you maybe next week again if you want. Now let's go back to the GDX. The reason why I looked at the GDX in this particular manner is that holding well is good, especially when gold itself is in leg D with a doji candle today, just a minor 4-point pullback, and the technicals are very strong. So I would not be at this point looking at any short side. But the real question is, do you want to add to this now? And I think that there's just a little bit of a risk, because I think that the dollar's just got a little bit more to go before it comes back again, a little more upside. And that means that gold is holding beautifully here, and even the gold stocks. Just the real question is, and I'll just make it simple, I would just put it this way. It closed below 2150 says it's a point lower. It's quite a distance, but it would say, hey, this is going to have a struggle getting very much higher without a much bigger breather. And if today it closes higher, or by Tuesday, especially with Monday trading overseas, if the GDX can get to 23.10, it's at 22.57 now, that will maintain the rectangle. I want to see by midweek a break, not just a break above 23.35. I want to see a break into the 23.70s next week. And that'll say to me, great. Now I can even start talking about the 200-period moving average in the weekly, which is 25.37. Until then, I want to go one step at a time.
Yeah,
so I
it'll
think
be a really interesting study on the Chapman wave, Basil, is after you make a peak B, is the kind of the average number of days it takes to make a peak C, as long as the stochastic stays above 80%. And if it doesn't achieve a leg C by a certain number of days, then that could be another way to evaluate.
That's really good. But what I'm going to say to you, because I've done my own studies on the peak B, is that at peak B, you've got to be careful of a reversal to the downside in the lowercase h pattern. And that occurs within 2 bars of making leg B itself. You go sharply lower. And it hasn't done that. That's why I'm saying I like what I'm seeing.
Last quick question is, when you make a rectangle formation like this and your stochastic is still above 80, and you just finished a peak B, I mean, do you have any kind of probability that the rectangular is positive versus negative? Or
the MACD fast-moving average suggests that it's still positive. That's the way I have to look at it.
Okay.
I hope that helps you.
Right.
Hey, great calls,
Basil.
great questions. Thank you, Ben. Good perception. Folks, we're about to wrap up. We're going to have a long weekend. Hope you have a wonderful weekend. I didn't get to everything I wanted to get to, but that's okay. We've got a weekend to come, and I will be sending out my charts to my subscribers. And have a great weekend, and thanks for being here. Any questions you have, just send them to me. I love answering all these questions that I get, because it's just it shows that people are really interested in the technical aspect of the market, which you get here at TFNN. Have a great weekend.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.